Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Doron Levi. He is a real estate investor. He's a developer. He's an operator who has built, acquired, and improved over $100 million in real estate across multifamily, commercial, hospitality, luxury residential, and ground-up development projects. He specializes in creative deal structuring, value-add acquisitions, risk management, and scaling real estate businesses through disciplined execution. Today, he actively partners with real estate investors on multifamily and development opportunities across the U.S. Doron, welcome to The Wealth Flow.
Thank you for having me. Great to be here.
Yeah, looking forward to our conversation today. I always do like to start, though, with your background. Love to get an idea as to what you did before, kind of where you grew up, and what eventually led you to this world of real estate investing.
Wow, a lot to unpack with one question. I grew up. I grew up in Israel. I wasn't born here. I migrated here about 27 years ago by myself. No real, friends or family, and kind of try to do anything under the sun just to kind of pay rent, right? For the first 5 years, and then I really quick understood that I can pretty much make good money on my own. I started just opening service companies. I started one, I scaled it. It was kind of okay. And then I had a bad partnership. I'm like, I can do better by myself. And I just started for probably about 12 years, just building service companies, taking the lessons from the last ones I had and implementing them and selling for a higher price. And then I pretty much figured I had enough. I lost my dad. It kind of was a mind shift for me about how I view myself as a parent and how I want my life to look like. And I went into real estate. So that's kind of my background.
Okay, interesting. So you kind of started with service businesses, bought and sold a couple of those, or started and sold a couple of those, and then decided that you wanted to spend more time as a parent and maybe not just have work be kind of the only thing, and that's what led you to real estate?
In a way, my dad was a big career guy. He was very good at what he did. He read, wrote, and spoke 7 languages. He was a very smart guy, and he was very accomplished guy. The only problem is it was never around, right? So very quickly I found myself being him, and I said, you
Yeah.
know what? Back then I had 2 kids. Now I have 3. I'm like, I want to just, I want to be better than that. So I'm like, what, real estate kind of sounds like the venue for that in a way where you can be more present. And so I took all the knowledge I had from business, right, and I just implemented it in real estate, which I think gave me a bit of an edge. And I'm sure we're going to get into it a little bit later. So yeah.
Oh, that's great. And so when you took a leap into real estate, what type of real estate did what type of real estate did you first get into?
Ground out multifamily development.
Oh, wow. Okay. Ground up
No,
multifamily is what you stepped into first. That's super unique compared to most guests.
yeah, I mean, I never did this fix and flip in my life before. I went to the deep end of things. You know, in a I don't want to say a weird way, but in a way, I approached it as a business. I didn't approach it as real estate because if you
Hmm.
think about it, all businesses pretty much have the same pillars, right? They have the financials. You got to know your numbers, your sales and marketing, your operations, same pillars. So when I did my first real estate project, I just looked at it as a business with the same pillars, right? You got to get the right people, which is your HR. You got to know your budget. You got to know your numbers, your financials. You got to know sales and marketing. After you build a thing, you got to know how you market it, how you basically, move it. And that's kind of how I started. I didn't, it's crazy, I didn't know a 2x4 from a hole in the wall. I'll be honest with you.
Yeah. Okay. That's crazy. That is crazy
It
for sure.
is. It really is.
So tell me a little bit about that first project then. Where was this and in what type of a multifamily? How many units? Kind of. We can start with that, and then I'd love to hear some of the lessons that you learned along the way as well.
Oh my God. So many lessons, right? Um, I got about a half a block of warehouse. It was an industrial building. And I had this vision that I can knock it down and I can subdivide it and build an apartment complex on it. And the way I did it is I said, okay, how much capital do I have? And because, who in his right mind would give someone inexperienced a construction loan, right? I mean, think about it for a minute. I wasn't
Yeah.
really bankable. So I was fortunate enough to have a good amount of capital from the last company that I sold that I could have, kind of used my own capital. And that's what I did. I bought the thing cash. It was about $780,000. And what I did, I completely knocked it out. It cost me close to 200 grand to take it down. I subdivided it. I entitled it. Another couple of hundreds of thousands of dollars. And then when I subdivided it, I basically sold half of it
Okay.
for what the whole thing cost me. Because now
Oh, wow.
now it's fully entitled. It's worth much more, right? Like I
Right.
got building permits, MEPs, everything on it. And so I brought all my capital back home. And then I basically used it at a very high LTV for a construction loan to kind of mitigate my risk with a lender due to my inexperience, which, I had a really good track record of someone that executed on businesses. So I wasn't a complete clean slate, but no
Right.
real estate experience. And then I just built a 25 unit apartment building on my half. So that was my first project. The bank gave me 18 months to complete. I got it completed in 12 months. They gave me I think it was back then 6 or 8 months to stabilize. I stabilized it in 4. And I just refied, to a permanent loan.
Nice. Very cool. And where was this geographically?
Philadelphia.
Where'd you do this? Philadelphia. Okay. Nice. All right. Well, that's a heck of a run there, and then and you did a lot in there. I mean, it wasn't just a ground up development. I mean, you took a piece of land that started out as being industrial. You subdivided it. You had the ability to actually, after entitlements, get your initial money back out of it, and then financed the rest, and then went permanent on it. Do you still have that asset? Is that
I
one that
do.
you've sold since?
I
Oh,
do. So
wow.
I
Okay.
built it. So I built it for about 3.4 million,
Okay.
and now it's worth about 7.4.
Nice. Very cool. And so from that, tell me a little bit more about, what you've done since then. So that one you did, and then Obviously, it was successful. What have you done since?
So, have you ever seen The Sopranos?
Yeah.
So, because I just want to be clear, I don't know that from first-hand experience, but apparently the Italian mafia, they use a monkey to basically take the rap for people and sit in jail. I'm going
Hmm.
somewhere with this. Just bear with me, okay?
Okay. Yeah.
So
Yeah.
so I got it. So my next one was getting a monkey to buy off the half that I sold initially, that I just seen that it was not being developed like a year and a half later. Because I'm like, I can concentrate my resources, right? Like my property management, my contractors, all my people. Like I got an asset right here, right? So it just
Yeah.
made perfect sense for me to buy it. I saw that he didn't do nothing with it, but I knew that if I'm going to come to him, because obviously I know how much I sold it to him for, then it's going to be a tough negotiation. So I got a monkey, and I basically, which was a friend of mine, I told him, hey, just pretend like you wanna buy it off of him without him knowing I'm involved, and
Yeah.
uh, and I kind of negotiated through the monkey, and and I got it for almost what I paid for it, just like shy under 90 grand, because he was just stuck with it, like he didn't know what he's doing. He was like a big tile guy. He was importing tile. He wasn't a real
Hmm.
estate guy. So, he got investors' money from overseas, and he was basically, frozen out of fear that he didn't really know what he's doing and he's over his head. So I was able to identify the pain, which I'm kind of giving you a hint for a good question to follow, just as means to try to drive value to your listeners. Wherever there's pain, you can get creative much better. So I always look for the pain. Like, why in a year and a half you didn't do
Yeah.
nothing with it, right? So that was his pain. That was his pain. But he had an ego thing. Like he can come to these investors to say, "I'm just giving you your money back," because he also promised them like pref. So I
Right.
gotta give him enough to kind of get him out without taking a hit. So that's what I did. So I bought that, and I built another smaller complex, because I was trying to bypass just some stormwater management, because it was on one big lot. So I
Hmm.
built a 17 unit, but luxury homes, like not homes, luxury apartments. It's like a resort feeling,
Hmm.
which I was just challenging myself. I love to challenge myself, and with that specific build, and I did well with it. I still have it to this day. I try to hold everything I build. So that
Yeah.
was my second one. I mean,
That's great.
how more you want me to go? Like, do you want me to tell you? Just tell me. I don't want to keep
Yeah,
going.
yeah, yeah, absolutely. No, 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 for sure. I'd love to hear how it progressed. I mean, it sounds like that was logical to while it was unique to go back to somebody you've already sold the property to, it was still, like you said, it was kind of a logical next step since you already had, an existing 25 unit apartment that was right there. You had your resources there for both the managing that apartment. Yeah, what else? What else did you buy next or develop next?
Yeah. So the next one was actually right after. Well, it kind of started before COVID hit in 2019. Was it 2019 or 2021? No, I think it was.
COVID was like right around 2020.
Okay.
It was about, yeah, like March
Smack
of
in the middle.
2020, something. Yep, exactly.
Okay,
Yep.
got it. So there was a industrial looking, like it was a senior assistant living looking, like later on at it. They kind of got wiped out by COVID. Half of the population there, you know, half of the seniors didn't kind of survive COVID, and the other half got pulled out by their families, not wanting to end up like the first half. Um,
Hmm.
and it looked like a good play for a multifamily. And we gave an offer. Actually, was rejected. He went under contract with someone else, but the broker liked us so much because we were like really kind and professional. And hey, good luck with it. If it doesn't work out, just we're here. We're interested. Just let us know. Sure enough, like a day later, a day after he fell, like literally a day after he fell, they're calling us, and got in on the contract. It was an historical building,
Okay.
and I don't know what you know about renovations and things like that. But historical building, it's like the black belt of renovations. Like it's very, you know what I mean? It's very
Challenging for sure.
challenging is a good word. Yes, I'll take it. So got all the zoning and the permits, all the things, and we had it already approved for 41 units, and a year into the construction, so acquisition was 3 million, and construction loan was 4 million because we were basically converting the senior assisted living into an apartment. So you're talking about beds with oxygen. You're talking about you know handicap bars and ADAs everywhere. Like it was a heavy lift. It wasn't just you know.
Yeah.
So about a year into it, we saw that Airbnb got prohibited in Philadelphia. I don't know if you remember. It kind of followed the trend all over the country. It started actually in San Francisco, New York, and they cut off Airbnb. And just scratching my head, thinking where all the short term people are going to go, right? Like there's going to be a void in the market. Um, you know, Without going over anyone's head, development 101 is basically listening to the market. I always
Yeah.
preach to people, it's never what you want, it's what the market needs. Like you can have an amazing idea, but if the market doesn't need it, it's not going to absorb it. It's going to fail, right? Like you
Right.
can build something amazing, but if the market doesn't need it, then it doesn't need it. So the market had a big void, and I'm like, we can just fill that void with short term. So we found a loophole to get
Mhm.
in the zoning to get basically a license to have a hotel, and pulled another $4 million construction loan for now 8. So we're about 11, a little over 11 million in it,
Mhm.
and 3 years later we got done that project and completed it to get appraised for almost 30 million now. So
Oh, wow.
that
Yeah.
was that project, and great success with it. It was featured in the New York Times Magazine as a must see. Uh, Two restaurants got really nationwide recognition. One was in the magazine, Esquire magazine, one of the best restaurants in the country in 2024. And
Mm.
then the other one got number one in Philadelphia in 2025. And just a lot of recognition. The synergy was obvious. Get a good restaurants going on so you can get the foot traffic into the hotel to get exposure to the actual hotel. So we were kind of heavy on the restaurant end of it, which is
Mhm.
also a business, right? Um, and it worked very well. And not we got development best development of 24 by the Business Journal for that project, and not too long ago we got a Michelin key for this establishment. So a Michelin key is not like a Michelin star that you think like a restaurant has. A Michelin key is for
Yeah.
the actual establishment. So did very well with it, and it was a big project. I mean, took us about 3 years to complete.
Yeah. Sounds
But
like a big project. Wealthflow audience, pardon me for a quick interruption to today's show, but I have some exciting news that I want to be sure that all of our listeners are aware of. We just launched 3 totally unique to the market funds that are at the cutting edge of technology and AI. We have combined my 25 years of real estate experience and my recent work as VP of development for a tech company to bring 3 awesome investment options to our audience. For full details, go to our website at bobocapitalventures.com. Again, that is BOBO capitalventures.com. All right, back to the show. Did you still have, so initially you were doing a conversion to multifamily. Do
mhm,
you still, was there still some rental property that was not, short term, it wasn't hotel, or did you end up pivoting and then converting the whole thing to
the
hotel?
whole thing,
Okay. Okay.
the whole thing.
And Yeah, and it seems like when you originally were thinking you were going to redo it to hotel, were they going to be like one bedroom type units, or were you joining some of the rooms together? Because it seems like senior living most likely was set up as single individual, bedroom areas, but maybe not.
Yeah, you're right. So it's a very unique boutique hotel in the sense that every room is different. There's no single room that is identical. And
Yeah.
so the two main components were the commercial areas. Like, think about it. It was over 15,000 square feet just of commercial areas between the cafeteria, bingo room, a library, just a lot of places where they played like bingo. Um, that needed to be converted. And again, it was all about the synergy between the rooms and the commercial area. So we
Hmm.
kind of had a concept of getting kitchenettes inside because we already had the plumbing. So every room has its own like kitchenette, which we custom made to sizes. I developed a lot of good relationships overseas because I import a lot of stuff. I import stuff from Turkey, from Italy, from Greece. I used to
Oh,
work
cool.
heavily with China, where they fabricated for me everything for specs. Now I don't work with China as much, but I do work a lot with Turkey. Indonesia, we fabricated all the furniture to the hotel in Indonesia. I can't even tell
Oh,
you
sweet.
the markup in this country for furniture is
Yeah.
insane. Okay.
Yeah.
And that project really pouring all my relationships. Um, we flew a pool in from London just to give you an
Hmm.
understanding of how much and crazy did like we went there. And so the concept was to make something extremely unique. The area is is a very unique area where it's like cultural mecca for restaurants and like nightlife. So you had to have the good location, obviously, in order for this to succeed. Because I'm not going to stand here and and take credit for the success without mentioning the fact that if we wouldn't be in as a good a location, I'm not sure, I would have gambled so heavily with, you know,
Yeah.
the play, right? So the location was good. Again, listen to the market, right? Like,
Hmm.
um, so that helped. So yeah, I mean, we were able to explore a lot of loopholes between tax incentives. Like, I got probably close to a little under $2 million in tax credits
Nice.
just because it's being historical, right? So being a developer really helped because we know a lot of loopholes. Liquor license, right? It's a few hundreds of thousands of dollars. We were able to find a loophole. We got it for free just by adding one
Yeah.
more room.
Hmm. Okay.
Isn't that something?
Yeah, that is. What was the catch there? Why by adding one more room did it make a difference?
Because they had to divvy it up to amount of rooms. I don't exactly remember. You are talking over 4 years ago, but it was a
Yeah.
nuance between the zoning attorney and someone in the city where they identified it as like I don't want to just say, but we got it for
Yeah,
free.
no
That's
problem.
yeah. I mean, you are talking over 4 years, but
Yeah, no problem.
so yeah. So that's pretty much it. I mean, it's doing well. It's growing every single year between revenue. We're still learning it. I'm not going to stand here and tell you it's perfect because I don't have a background in restaurants or in hospitality, so I'm learning
Hmm.
it. But we went through some turbulence and our ADR, which is the average daily rate, went from 250 to 350 to now 450. And over the weekend, we are even getting $800, a night. So
No, nice.
we're getting up there, and we're doing a lot of venues like weddings and things like that. So that also helps. So you kind of do a trial and error and implement and correct your course. Kind of like when I sold companies, I took all the lessons and I moved them on to the next one to the next one. So again, it means to drive value to your audience. If you ask me, my number one take from that project is to learn how to pivot. You have to pivot. You
Yeah,
have to
yeah, sounds
always
like
pivot and pivot. That's the number one trait I think a good entrepreneur needs. I see a lot of people that fail because they get stuck in their head and they
mhm.
freeze. You got to keep pivoting, you know?
Yeah, yeah. Makes a lot of sense, and that's a great example of definitely doing that. So, I mean, that's several really, really crazy projects, but very impressive. And I'd never heard of a Michelin key, but that's really neat that you were able to achieve that, and also just have having the restaurants in there that are successful, huge driver for the hotel. What other projects did you do and take on after that?
Well, I was kind of, I want to say I was kind of, not fed up, but I kind of like I wanted to rest from projects after this one. You know,
Okay, okay,
But
I understand.
but it's not the truth because now I'm building a small luxury neighborhood now. So I didn't learn my lesson. But for a little bit, I just was focusing on acquisition. But after this neighborhood, I'm really like I want to rest. I just want to focus on acquiring. Like I'm acquiring multifamily. Value add is really my niche. It's been my niche. I love it. Um, just just buying multifamily and doing value adds. Like 1 week, I just got not too long ago. I closed on it. Like maybe not even 2 weeks ago, 230 units. Value
Okay.
add was mismanaged. Picked it up for 8 million, and pro forma within 5 years is going to be 16 million. So
Yes.
those are the things that, like, for me, it just makes perfect sense. Like I know the construction end, I know the zoning
Yeah.
end, like I know everything inside out. Like for me, where I'm at, it's kind of stupid not to utilize all my gears. It's like,
Yeah.
you know, you have a Ferrari and you're keeping it stuck in second gear. Like I know a lot. I need to put it in good use.
For
Um,
sure.
so that's where I'm focusing now, really on multifamily and value adds. Hospitality is extremely demanding,
Mhm.
and let me tell you something about restaurants, man. If you hate someone, wish for them to have a restaurant. How's that?
Yeah.
Straight up. I
Why
mean, I'm just being honest with you.
yeah.
It's a lot.
Why do so do you guys own the restaurant as well?
Yeah,
And okay, wow. Okay.
yeah. We don't lease it.
And
We own it. We operate it.
wow.
One restaurant
Yeah.
alone has 47 employees.
Wow.
It's a
Okay.
heavy lift.
For sure. Yeah.
Yeah. So yeah.
And so how did you tell me a little bit about that, because that's also unusual, right? What kind of food is it, and how'd you go about with the concept of that particular restaurant? And what do you have? I assume you have a team that helps you out with this, but
Of
tell me a
course.
little bit about how you came about with these restaurants and put them into action. Because yeah, if you look, restaurants is one of those businesses that even a good restaurant that appears to be a place that you'd want to go to again. Sometimes you'll go back and then they're challenged, and something, maybe there's an inconsistency, and then all of a sudden the doors are closed. It's like it's a hard business. I mean, it is a tough business to be in for sure.
Yeah, it's very tough, and that's why I said what I said. And at the end of the day, I think that learning how to do things you need to do and do them right is only half of the part, of the part of what people think they might need, because the other
Mhm.
half is what not to do. What not to do is just as important. So in the beginning, we had, um, it's a management company. We actually went through a couple, and we went through two, but the second one actually was bought by a different company. So we actually went through three. So we really learned how much you can screw things up by doing things wrong. And those are big companies that have like Sheratons and Hiltons, like they're, but hospitality is very tough, but it's also very rewarding, you know, in a sense that if you screw up people, like it's very, very hard to build. It's very easy to ruin, right? Like you destroy it in a minute,
Yeah,
but it's very hard to build, like loyalty and things like that.
for sure.
Um, but restaurant is really, really tough. Labor is hard to find. I mean, I can't, I don't know how old you are. I'm 47. And
Yeah.
when I was 15 and 16 and 18 and 20, I did anything under the sun just to make a buck. Like I busted tables. I worked 14, 15 hours a day. And nowadays people don't want to work, right? I don't know if it's the Instagram with all the Lambos. Like, I don't know I don't know. They think they can make easy money, but it's also very hard to find labor,
For sure.
for that industry. And it's not just for me. It's like everyone in town is having the same problem,
Right.
So we learned a lot on how to do things, but also what not to do, like overstaffing, for example. We learned from the other management companies what really matters. Like, they were looking at matrices that were like important on paper, but in reality didn't really drive the important things like the customer loyalty. Like, we have people flying in from Germany to our hotel to be in our hotel, and they can go stay in New York and anywhere they want, right?
Uh-huh.
Like, the little things, the little nuances. But at the end of the day, you really have to understand that it's a full-fledged business. It's not real estate. Hotel is not real estate. Hotel
Right.
is a full-fledged business, having restaurants or not. And if I ever get another hotel, I'm not gonna get a restaurant with it. If I'm gonna have any kind of food and beverage, I'm just gonna like rent it and not even deal with it. Like, just give me a rent check, or
Yeah.
or some sort of a spread with your revenue, maybe, but not anymore to manage it. But it's something that we had to do, and we had to learn, and not likely that I'm going to do it again. Like restaurants, I'm
Yeah.
being honest.
No, yeah, it's a great lesson though, for sure. And then I love that you're now looking at kind of existing assets and coming in and saying, what can I still, I still have these skills of being able to do ground up development. That's still something that I, know how to do, and have the team to be able to execute on. But now you're taking some existing stuff that's a little bit lighter of a lift, but you can reposition those and gain a ton of value. Like you mentioned, I mean, you're going from potentially buying in at 8 million and working through the performa so you can get it up to the 16 million.
Yeah. So that one specifically, have you ever heard of American Heritage Bank?
I have not.
What part of the country you're from, Keith?
I'm in San Antonio, Texas.
Gotcha. Okay. So it's like a federal credit union, basically, American Heritage.
Okay.
The reason I'm bringing this up is because they're very big. So the founders of American Heritage gave this property to their son. He's about 60, just to give you perspective, right? He had
Mm-hmm.
22 different properties. This was the smallest one he had, 230 units in his portfolio. This is the smallest one that he got. Um, and he just didn't know what he's doing, right? Like, he just, I don't know if you heard the expression, banks are not in business to own real estate, right? They're only
Right.
lend on it.
Yeah.
So they're very good at lending. Like, risk mitigation is probably the best thing they do, but they don't know nothing about how to manage real estate or nothing like that. And he was just driving it to the ground, like a multifamily, with over 70% expenses, right?
Yeah. Yeah.
He actually said no to an $8 million cash offer.
Wow.
Yes. So the way I lured him in is, you know what? How about you'll be the bank and I'll pay you interest. So instead of just taking the $8 million cash, getting yourself subject to capital gains, how much you're actually going to keep out of that?
Yeah.
Let's do a seller finance, and let me have you as my bank. You hold a note. You're securing your money through the deed,
Mm-hmm.
and I'll just pay you interest. And he was like the emoji with the two hearts in his eyes when I told him that.
Yeah.
I'm telling you, he was like, "Oh, well, tell me more." So, dude, I ended up doing a 5 year. Well, it was a 3-year balloon with an option to extend for 2 years. Year one, 4.5% interest.
Wow.
Exactly. Year two, 5%, and year three, 6%.
Nice.
And then I also have an option to extend it by 2 more years. Year one at 5%, no points, no fee. Year two, 6%.
Hmm.
So I have a blend interest rate of about 5% for 5 years.
Yeah.
Is that good?
Oh, fantastic. Yeah,
Oh,
yeah.
that's good. Are you kidding me? Oh,
Yeah.
yeah. And there's no banks.
Right. Yeah, yeah, exactly. No, that's perfect. And
You
are those
kidding me?
are you paying principal and interest, or the interest only, or how did you set
No,
that up?
both principal and
Okay.
interest.
Okay, okay. Just
Oh,
curious,
yeah.
just curious.
And a
But either way,
35-year
what
amortization.
35-year?
Yes, sir.
Oh, there you go. That's the beauty of seller finance, right? You can kind of make up whatever terms you want, and yeah, that's it. That's awesome. That's awesome to hear for sure. And great point too. Here as somebody has an opportunity to take $8 million, an offer for $8 million cash, but by the time you're done paying capital gains on that, you're going to take a hit. And so this gives him an ability to. I'm sure he didn't need the money, and this probably puts him in a position where now he's receiving that cash flow coming in, and really only paying off some of the principal. So
Right. So again, understand the pain because rich people have a different problem. They have too much money and they pay
right,
too much taxes. The guy literally jumped on his jet, came with his wife to eyeball me when we did the due diligence and shake my hand. And he
yeah,
went back on his plane and flew back home.
right,
Like the guy was born into a jet, like from his dad. That's just
right,
it's a lot of money. Put it that way, right? So
yep,
so what is one of the biggest problems that rich people have? Taxes,
for sure, yeah,
taxes, right?
yeah,
So so I basically helped him, and at the end of the day, he was in pain because he was running it to the ground. He had over 70% of expenses on that multifamily.
hmm,
70%. Like I
yeah,
think it's
this,
like 73%. So I come in with my team, right? And we install the right systems in place. We put the right procedures in place, and we just start biting into the expenses. And by year three, we're close to 50%.
yeah,
So then you're increasing your NOI, right?
for sure, yeah,
And when you're increasing your NOI and a little bit in the rent, but it's not a rent lift. Like I'm not going to stand here and tell you that the rents are significantly under market value because they're not. Yes,
yeah,
they're a little bit, because it's a workforce, you know, a little bit, but the bulk of the value add is not even through construction. The guy dumped $3 million to renovate the place.
hmm,
Three
yeah, okay,
million dollars. Every window on these 230 units was changed.
wow,
Over 70% of the units are almost brand new,
yeah,
not renovated, brand new, like new kitchens, new countertops, like new.
yeah,
So it's not like the value add is a heavy lift as far as like construction, right?
hmm,
So what is it like under 40,000 a door where the market sells for about 80,000 a door? Because you make
right,
the money when you buy, Keith, that's when you make the money.
right, right,
You buy
yeah.
right.
No, it sounds like you did. You bought darn right there, and and at the end of the day, it doesn't whether you're increasing rents or you're decreasing, the expenses. At the end of the day, you're increasing the NOI, so you're increasing the value of the property by doing so. And so there's more than one way to do it, and usually it's a combination of both. But when you see somebody that's got 70% expense ratio, that's high, and so there's ways to be able to look at that and say where's this bleeding out, and where can I help out here, and get it more in line with what it should be. So
Yeah. Yeah. So it's that. And then you were able to obtain a relatively cheap debt to even help you more with your numbers, right?
right,
So yeah, it's a good deal. So you asked me what am I up to now? That is it. Like I'm looking for multifamily. The more doors, the better. Because if you do a rent lift on even $50 over a few hundred doors, then it's significant money.
right, hmm,
Um, and just do the value add. That's really where my head is, and that's what I'm looking to do more of and expand on, and even through creative, because there's different. I have a really good friend that he's a used car sales guy. He's in his 70s, for probably close to 40 years. His name is Gary, and we stood in his dealership one day. You know the service lane where people just bring their cars to get service, and
Yep.
there's a window, glass of window. We're standing inside, and I'm not making this up, Keith. I can't even make this thing up, even if I think about it. A yellow Beetle with neon pink seats pulls to the service line. And I'm looking at this and I'm like, is this, it looks like a cartoon, right? And I look at him, I'm like,
Yeah.
Gary, who the hell's going to buy this thing? Right?
Yeah.
Dude, he didn't even blink. He looks at me like dead in the eye and he goes like, there's an ass for every seat, my friend. There's an ass for every seat.
Yeah.
Why am I telling you this? Because there are people out there that have problems
Hmm.
and they can't find someone to take those assets because they have problems. And
Right.
that's where I fit in.
Yeah. Yeah.
Like most people, like how are you gonna find a bank that's gonna lend you? Think about this for a second. On a multifamily with 70% expenses.
Yeah. Very difficult. Yeah, for sure.
Of course, right? So I just bring creative solutions to difficult problems and I make a win-win for both the seller and myself. That's all.
Yeah. No, it sounds like you've done that all throughout your career. And has this all been in the Philadelphia area, or where all are
No,
you looking and purchasing?
I buy nationwide, mainly red states.
Okay.
Um, I'm not trying to give myself a plug, but on my website there's a buy box
Hmm.
that actually shows exactly on the map where I'm buying. So I try to stay focused in landlord friendly states. They
Makes
just
sense.
allow you to, because I'm trying to hold them. I'm not trying to flip them. So I'm in essence becoming their landlord. So I'm
Right.
just focusing on those type of states, landlord friendly states.
Yeah. Yeah, for sure. Okay. Well, no, this has been great. So look, you've done all kinds of things, and I think there's kind of an underlying theme that it's been good, and that's really kind of solving people's problems, finding a problem and solving it. But aside from that, if there was like maybe the top three things that you've learned from these various projects, the various things that you've done, what would those be? What could you convey to the audience? You know, you've got a ton of experience, so I'd love to hear what that is.
Oh, that's easy. I don't even need to think about it. First of all, it's never about you.
Yeah.
Nobody cares. Nobody cares. Like what you want, nobody cares. It's not relevant. It's always about them. If you can stay focused on them and actually understand what the issues, because most people are too caught up on what they want, and if that fits their box,
Mhm.
then you're gonna get so much further than most people. And the second one is, God gave us two ears and one mouth for a reason.
Yeah.
Listen, keep your mouth shut and your ears open. If you're nice to people and you're kind to people, it would amaze you how much information they'll tell you.
Yeah.
Listen, keep your mouth shut and your ears open and listen.
Yeah. Makes
That's the
sense.
best advice I can give you, listeners.
Ah, that's great. No, this has been good. Well, Doran, how can people find out more about you?
Well, follow what I'm up to on Instagram. My first name is Doron Levi with an I, Doron, Doron Levi REI for real estate investment. And my handler, and I'm very responsive to my DMs. If they have questions and they need advice, then I'm always here to help.
Perfect. How about I got two other questions for you that I ask every guest. One would just be any advice you'd give somebody who's maybe just starting out in their investment journey.
Um, you have to have some sort of risk tolerance to do real estate, but you got to pick the right one for you. Don't look at who's doing what to your right, to your left. Understand that people are different and you are just like other people, very different than the other peoples you want to become. In the Bible, it says, know thyself, know yourself. Like, it's okay to be risk diverse, and you should. If not, just go have a W-2. You have to come out of your shell, because it's not just that dreams happen outside of your comfort zone. They also die in your comfort zone.
Yeah.
So you got to be a little bit of risk diverse. And not everyone has to be an entrepreneur. Not everyone has to do this. If this is not good for you, don't force it. If you like to be comfortable with, then that's okay. But figure out who you are and understand who you need to be in order to do this. And if they're not the same, that's totally okay. But when you don't figure this out, there's a lot of pain involved.
Yeah. No, that's great advice. Love it. How about book recommendation? Doesn't have to be real estate related, certainly can be, just something you've read that's been impactful.
Love it. EOS. What the heck is EOS? EOS is basically a way to help anyone in business, real estate, or anything else scale. It's going to save everyone so much pain, especially the entrepreneurs, because entrepreneurs are visionaries, and usually visionaries are not good with financials and paperwork and all the things that you kind of hate, but you kind of have to have
Right.
to scale. So EOS just really, really helps. It's kind of like it's a mind frame on how to it's system for entrepreneurs to scale. It really makes a big difference.
Yeah, absolutely. No, this has been great. I appreciate you having taken the time to visit with us and being a guest on the Wealth Flow, and I think we'll call it a show.
Yeah, man. Thank you for having me. I had fun. Hopefully, I helped some of your listeners.
I'm sure you did. It was great advice. Appreciate it. All right. If you're still here, I assume that you found value in today's show and with the guests we interviewed. Please take a minute to subscribe and to review the show. It really helps. Also, wanted to remind you to check out Bobo Capital Ventures to get the first look at our 3 new cutting-edge, first-to-the-market investment opportunities. We have only about 15 spots for each fund for retail investors, and we would love, more than anything else, to have our audience be part of that group of limited partner investors. Thanks for listening to The Wealth Flow, and have a great day.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.